Hi, welcome back to Remote Trading Room. I'm Bill Kaufman, and today we're going to talk just a little bit about options. Okay, let's go to the charts. Okay, now we're back at the chart. So we're looking right here. This is the Thinkorswim trading platform. We're using the simulating trading platform page today because with simulated, you get to use simulated dollars. So always good to lose nothing. And again, you don't make anything either, but you do get practice, and practice makes perfect. Okay, so we got United Airlines right up here. We're looking at the daily chart. This is each candle represents one day and the last 1 year, 365 days. You can see that it's about the last couple of months. United has gone upward with all the transportation airline stocks. Really good day 3 days ago. Yesterday. Today it's retracing somewhat, but everything in the news keeps saying that travelers are going to have a very good summer, at least the travel industry. So let's just say we're going to do today a covered call. A covered call is nothing more than you have shares of stock and you want to sell a call option against those shares so that you can pick up some income. So let's go to the charts again and get off the daily chart where the high is 56.97 from yesterday. Let's look back in time. You can go to the weekly 3-year chart where each candle represents 1 week. All the way back here, it got up to $63.70 per share, and that was on the week March 15th, 2021. Okay, so let's look at the trade. When you want to do an option, and when you're doing a covered call, you're selling an option. And when you sell options, it's always good to do it fairly short term. They say 30, 45 days or less. So let's look at the 4th of August. And that high was 63. Well, we won't be that greedy. Let's just say 60. That's the strike price. That's where if by August 4th, United's at $60, you have to sell your stock for $60. And that's United could be at 61, 2, 3, 4, but you're just going to get 60. The good thing is we're going to buy it here today at 54. So that's 54.32. So that's about $5.70 profit per share. Plus, you're going to sell this call option. It's going to sell between 74 cents, which is the bid, and 80 cents, which is the ask. That's cents per share. Options go in 100 share blocks, so that 80 cents represents 1 share multiplied by 100. That's $80. Or right now, it just turned to $79. So here we are. We're going to right click on this. And because we want to do a covered call, you go to buy, covered stock. And I'm not going to do 10. We're just going to do 1. So we're going to sell 1 for United, 4th of August. $60 is the strike price. It's a call. And the price, this is the net price per share. And I'll cover that in just 1 second because we have to take into account that we are buying 100 shares of United stock. And the debit, because you're buying, you're going to spend money. So the 54.27 is stock. You're getting it. You're selling the premium, that call option, for around 70, 75 cents. So at 54 minus about 70 cents or so is how you get a net 53.54. And this is only good for the day. And we're going to confirm it. And there it is. Break even. You're buying 1 covered call. You have 100 shares, 4 August, $60 call, 53.56. Here's the big number. profit, 644. Like I said, this is the profit. If United gets to $60 by August 4th, your profit will be $644, which you can see you're only spending $5,356. So it's about a 12% profit. Not bad. But if it doesn't go to 60, you get to keep the call money that you made because you sold that call option. So you keep that about $70 or so. And let's send this away to get it in the system. And it's working up here on the monitor. Then we can see sell one call, $60, and you're buying the stock, 100 shares. And then we just have to wait and see if it fills. In the meantime, let's go back to the chart and see what's going on. They actually put it on there and they can say, hey, this is what you got going. So that's how you do a covered call. We could adjust our price up or down if we kind of how much we really want this trade to go through. But we'll just sit there, and the whole lesson was just to how to put it in. And like I said, covered calls, good way to bring in some money. Because like I say, if United doesn't make it to $60 by the 4th of August, well, guess what? You get to sell another covered call against it. And if you had sold the covered call for like $70 on this one, and it didn't go to 60, maybe in August, options might go for another 70. It's just a way to bring in income. Okay. Well, that's it about covered calls today. Thanks very much for turning into a remote trading room. Appreciate you being here. And this is for educational purposes. Thank you very much.